Hey everybody, welcome back to another episode of Cash Flow with JVH. Today we're going to talk a little bit more in depth about the put credit spread strategy that I had posted a video earlier about. I had a user, John Doe, who asked specifically to show a live example. Well, I didn't want to do a live example, but I figured I could take you through a little bit more detail and show you a little bit more about what exactly I'm doing and the thought process through the strategy, and showing you a little bit more of the details around the numbers that are going into this strategy. So stay tuned and take a look at this video if that's what you're interested in seeing. If you haven't seen the previous video and you want to see more of a higher overview or a summary of the put credit spread strategy, you can check out that video. I'm going to put it up top here so you can reference that as well. Just really quick, if you do like these videos, please give me a thumbs up. Also provide any comments in the comment section, questions you may have, suggestions for additional videos that you want me to put out there, put them in the comment section. Also, don't forget to subscribe to my channel and make sure you share this channel on all your social media so that I get a little bit more exposure. You can check out different links to how to support the channel in the description below. I provide my Robinhood referral link so that you can get a free share. I get a free share when you sign up for Robinhood, as well as my Venmo information. So the first part of the put credit spread strategy, right, is to find an underlying stock or ETF that is extremely stable. It's generally trending upwards or stays a little flat, right? It's either staying flat or growing and has a lot of volume, very reliable. So what I found today is IWM, which is the Russell 2000 ETF. And as you can see, steadily going up over the last day, over the last week, over the last month, and the last 3 months is a usually pretty good indicator because you'll be most likely selling weeklies on these put credit spreads. So generally, you can see there's a little dip there, but generally it is going up, which is great for the put credit spread strategy. So what we're going to do is we're going to, in Robinhood, we're going to click. Now I know I have a little bit more buying power, but again, the idea here is you really only need $100 to get started in this strategy to make anywhere between 5 and even 30% on your money every single week. So if we go ahead and hit trade options, and what you want to do is you want to click on sell, click on put, and then also we're going to stick with today is actually December 23rd, so we're going to go about a week out. Now again, if you want to play it a little further out, that's fine, but generally what you would like to do is do weeklies here. And you can see the current trading price is $199.25, and then we're going to scroll down and we're going to take a look at this chance of profit column, right? So we want to find one that's at least 80% chance of profit, right? And if you're a little bit less bullish, right, maybe you grow down into the 90s range or the higher 80s, lower 90s range, whatever your comfort level is, right? I generally stay in between the low to mid 80 range. So we're actually going to take a look at these two options here. Now you can see the current strike prices of 192, 191. If you don't understand what some of these terms that I'm using, like strike price, bid-ask spread, things of that nature, I encourage you to check out my video series that talks about options and their definitions. So what we want to do is we actually want to sell a put and then buy one directly underneath of it. All right, so for this example, we're going to buy this $192 strike price put, right? And you can see, I'm sorry, we're not going to buy it, we're going to sell it. You can see you want high volume, right? So this has 1,000 contracts that have already been traded. There's still over 12,500 that are open, waiting to be traded. And then you also want to find, a bid-ask spread that's less than probably 10. I mean, this one is 82 and 87, so the bid-ask spread there is 5, which is pretty good. Then we're going to buy the 191, And let's see, you can see the volume here is over 1,000. Open interest is over 22,000 as well. And then the ask here is between 71. The bid ask is 71 and 75, which is 4 points difference in the bid ask spread. So this is a really good selection here to trade. And also, if you're seeing that the current share price 199.25 in it'll be 8 days later, I really don't see the Russell 2000 dropping from a little over 199 to past 192. I just don't see that happening. And again, if it does start to drop, you do have the option of closing this put credit spread and getting back some of your money. All right, so we're going to sell the 192. We're going to click buy, and we're going to buy the one right underneath of it. So you see the difference in strike prices here, 192 and 191. It's $1 difference. Times that by 100, because there's 100 shares in a contract, and that's how you get your collateral. And I'll show you the collateral in just a second. So you can see we're selling the 192 for December 31st. We're buying the 191 for December 31st. You can see the total credit here of 12 cents. We're going to hit continue. And I'm going to put in, we're going to do this one contract, okay? And we'll just leave it good for today. We're not actually going to process this, but you can see the bid-ask spread here, right between 7 and 16. It's about 9 points. It's not terrible, but it's not really ideal. But you definitely want something that's less than 10, which this falls into that range. We're going to hit review order, and what you're going to see here is actually the minimum credit being $12, right? That's the credit that you're going to be paid as soon as this order is executed. And then the collateral is how much they're going to hold from your Robinhood account. Again, this is what I said. You only need $100 to do a put credit spread. And you're going to make $12 on this $100. So that's 12% on your money that's going to happen in the next 8 days. And again, down here, it's giving you the order summary of what's actually going to happen. So let's take a look and see what is actually happening. Let's dive into the numbers, but you get the idea. If I only had $100 in my Robinhood account, once this gets executed, they're going to hold that $100 as collateral, but they're instantaneously going to give me that $12 in my Robinhood account. And then once this expires, I would then, if it expires worthless, I would then receive on December 31st, my $112 would be in my Robinhood account. So let's take a look and see what these numbers are actually telling us. So I'm on optionsprofitcalculator.com, which is a great resource. It's free. You can go on there, type in all of the different options, the calls, the puts, the spreads, whatever strategy you want to use, and it'll tell you exactly what your profit and loss is going to be. So we're going to click on credit spread, because that's exactly what we're doing. We're going to do a put credit spread. And it's going to show you the calculator down here at the end. And what we're going to do is we're going to type in the exact options that we chose here. We're going to go IWM for the symbol. It's going to grab the price. And we're going to buy, as I mentioned before, we're going to buy the 191 strike on December 31st. So we'll go to select option. We will choose December 31st up here from the date. And then we want to stay on the puts column, right? The puts side, because that's what we're buying and selling, puts. The 191 strike price, we're going to do the 74, because that's the mid. And then the right, that's what we're actually going to sell. Right is just another way of saying sell the option. We're going to select, again, December 31st is already selected for us. And this is going to be the 192. That'll be the 85. Now, the numbers may be a little different than what you're seeing in Robinhood. You can always adjust them so we see real numbers. We'll do it this way. Then what we're going to do is you're going to see down here the spread price. This is your 12 cent or $12 credit. And we're going to hit calculate. And what we're going to see here is what exactly is happening every single day that this contract is in existence. Right? So right now, the current trading price is around 199, right? And as you see, as the days go on, if the price of IWM goes up, you can see the credit that you're receiving, right? So if you wanted to close it early, it jumps up to 206 today, right? I know it's after hours, but stay with me. Let's go to tomorrow. Tomorrow jumps up to 206, and you want to close it, you'll get $10, giving you 10% of the collateral of the money that you put out for collateral, right? You're getting $10 on the $100. Now let's just say the price starts to go down. If the price starts going down, right, goes down to 198, that's fine, because as time goes on, theta is going to kick in, and you're going to see that as long as it stays above or at the $192, which is the strike price of the put that you purchased, right? I'm sorry, that you sold. As long as it stays above that 192 on expiration date, you're going to get that full $12. Okay, so if the stock goes up or even if it goes down, you're still going to be making money as long as it stays above that 192. And again, if you wanted to, close out of this contract early, right? You maybe see it goes down to 197, and you've got 2 days until expiration. Just sell it early and take $7 credit instead of the 12, right? So you make 7% instead of 12%, but still you're taking a credit as opposed to a loss. Okay, so I hope that answered some of the questions that John Doe had, maybe others had as well, but were hesitant to ask. Please feel free to ask questions, provide as much commentary in the comment section of the video. Again, please be sure to like and subscribe to my channel, like this video, subscribe to the channel, share my channel out on all of your social media so that everybody can get exposure to it. Really help me out grow this channel so I can provide more videos and more value to you, the viewers. Again, check out the description. It has links to how you can support this channel, including my referral link for Robinhood. You get a share, I get a share, and then also my Venmo account as well. Again, really appreciate everybody watching, and have a great day. Happy trading.